Stand by. This is probably going to try to crash right now since I share. Sure enough. Well, we're going to try. All right. Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Friday night, February 3rd, 2023. My wife is torturing me right now. She just made a pizza. We're both 2.5 days into our fast, so we're going to get through this quickly. All right, so we'll start with the quick look at the swing portfolio. Now, you'll recall from yesterday that we exited a lot of positions yesterday to raise cash and reduce risk, so there's not a lot of activity. So Alcoa, we cashed yesterday for a win, and we were just stalking it today, no action. Same thing with Cliff, a minor gain yesterday. Yesterday we closed that minor gain. No action today. There was a tradable move in there, but we didn't take it. CVS, we cashed a couple. Well, we took that loss and then made it back mostly on this one. This is a Godzilla that we won and lost on, and just scratching out on that one, or not scratching. We're not trading that one right now. Devon Energy yesterday was a quick fail, quick gain for about net nothing. There was a nice move in Devon. I didn't trade it, but there was an intraday move that was available. Emerging markets was one that I took. This was a gap down, quick collapse, like a frog entry. And on the 30-minute, you see that was a really nice trade. And I didn't want to hold anything over the weekend. So that was a gift intraday, a rapid swing, if you think of it that way. There was a move in the last 2 days in Ethereum. Now you can only play ETHE on the long side. Today there was a down move in Ethereum that was tradable. We didn't play it. This is Mexico. We cashed a win. And then another short win yesterday. There was a micro move available. We didn't trade it today. The mover was Brazil. So we've had a nice quick bite, collapsing, or caught a 2 short win. And then today a continuation trade that went right into the close. And that was another very orderly mover today for a 1-day swing. International paper, we're holding the position still. We got long here on a caught a 2. Our stop is still here. It's held pretty well on a down market today. So if the market goes up on Monday, then I like the chances here of continuing. It has to get above 42.75 to be interesting. So we'll give it a few more days. We'll just keep the original stop in place. I'm not in any hurry. I'm giving it that much room for my 1R to give it a chance to continue this really nice move, and then the blowout earnings and the strength in industrial. So we're letting that one cook. Yesterday we cashed that gift move in IYR, the real estate. There was a move available today we didn't get, but now that it's coming back and holding support, I'm thinking very strongly about a nice risk box like this, and ready to play long. Target here, and then add a second position if it breaks above the the peak. I think I would go short here. I will, in fact, I will if that breaks, and then I'd look to add a second position if this breaks, and then a third position if that breaks below a 10-day low. So I'll add a third one there. So there's some, that one looks to be very interesting going into the next week. McDonald's, we've not been able to get on the right side of the angels on this one with a couple quick scratches. It's monkeying around here, setting up a nice consolidation breakout. So maybe a compound critical state here. Either direction, that looks tradable. Your target would be the top of this RL10 right here. And that looks to me like you could get 2-to-1 and then adding the second position if it breaks above, say, 268. Marijuana. We cashed a nice win here. This was the second position, so that was a 2-position swing. SSC win, a COTA 2 win, another COTA 2 win, and we're just letting that thing cool off. That thing's chilling. Now, what I like about this one already is the sort of the compression, and so now when you got lower highs and it's testing this previous low right there, I could be short on that one at the start of next week, and I'd put a double position on that because if that collapses, it's coming back to 640 in a hurry, and it's been so weak. If we go back in time a little bit, this thing has been just horrible. So this rebound, this little rebound here is running into all of this resistance. So that was a tactical fail and a tactical gain. So this is a natural place for it to find its peak and then trade between 6 and 7. So if you can get short in here, you got a nice big channel to work with. So that'll be on the short list. Clean energy. We've cashed a micro win on that short, a COTA 2 long. It was a nice payoff. There was a move in here today we didn't get, but I like it stabilizing. This looks like the compound critical state for a fence sitter, where you have a tradable move to the upside and the downside, either direction, with about a 50-cent risk. That one looks very tradable going into next week. Treasuries, that was good timing. Gee whiz. We got that SSC. We stuck around as long as it wasn't breaking. We got lucky on the COTA 2 move. Cashed the gift yesterday. Didn't get this move, but that's feeling like a pretty savvy exit now, because it avoided 3 units of give back. We preserved those 3 units against the one that we gave back. We preserved 3, so I like that as the exit. Tesla, we cashed that one yesterday. I felt I was being really pessimistic on that one, and it did nothing today, so all is forgiven. And U.S. Steel, we cashed that little one, didn't want to hold it overnight, and therefore missed that move, and then the recovery move. So that was certainly tradable, but we were on the sidelines with Brazil, or in another position with Brazil. So that's the swing portfolio. Not many positions holding over the weekend, and I like where we are. Let's go to Sniper Trades. Was doing some recording. All right, so this is Intel. So Intel's been on our short list all week. It's been very volatile on Z5 and the Z1, which is the 5-day volatility Z-score and the 1-day volatility Z-score. It closed here yesterday. Here was the gap down, sold off to the bottom of the OR3, reversed higher, closed here, opened here, bent down a little bit, and then as it moves back through the OR3, I take it long here, standard risk box. So our stop is there. It gets interesting if it breaks above yesterday's, closing little peak of the RL10. I'd like to see it get above, the PSAR dot and the, the hump of the dragon right there. So those are two targets. We might have like target 1, target 2, as confirmation that maybe the move is working. So everything inside this space from the open, or I'm not sorry, from the entry up until about target 1, which is the peak of the dragon, is we think of that as the tactical space. And in the tactical space, the only thing I have to do, my job is to get my risk out and get it above my entry so that I can lock in this little wedge, which is no lose plus dinner for 2. And then, of course, as always, it's a science project on how far it's going to go. We don't know. Check or hold. So it immediately fails. And gives us about a minus 0.7. Now, this is one where the preemptive exit, taking that exit here, gives us about, so we lose that much, which is about a minus 0.7 of the 1R. So we take 0.7 of it. Now, that also bottom ticked. So if we had respected and were willing to take the full 1R loss, then we wouldn't have taken the minus 0.7. We wouldn't have had to re-enter on the resumption. So that preemptive stop to avoid taking that last 0.3 cost 0.7. Am I willing to do that each day and every day, all the time? Because what I'm trying to do is make a 0.25R improvement on 40% of my trades. If I could do that, like if I had 100 trades and on 40 of them I could improve by 0.25R, that would give me another 10R win. So rather than try to find an individual 10R win, I would like to have this mountain of many trades that are behaving statistically in a disciplined way. I can put stats on it. And if I can find some process improvements to give me a 0.25R win on just 40% of them, then that's going to give me a net improvement of 10R, as opposed to trying to find one more 10R trade. I mean, these are all, 0.6, 1.0, 2.0, something like that. So I'm trying to make haste slowly and plug leaks and make double knot my shoes. Don't make sloppy errors. Don't get carried away. So the net effect of that is on this one, by taking the 0.7 to avoid the 0.3, we take the 0.7. But that will happen. So we get the reversal. Take the entry, standard risk box, and all of those previous pricing levels remain in place, T1 and T2. I'm still trying to, in this tactical space, get my stop up to no lose plus dinner for 2. Again, so that I can just lock in this little wedge and make it a science project. The science project means I can just follow the rules. I don't have to overthink it. Whereas in this early stages, because I have personal capital in play, I'm nervous in the service. I'm even more agitated than normal, which is not that agitated, but I'm walking point for for the team. Oh, the next bar gets me right up to here. It has exceeded target one. So, with little to no hesitation, I can move my stop to here to lock in that little gain, which I do. I could also, if I was worried about the minus zero point 0.7 and wanted to get it back, I might run this all the way up into here in order to gain 0.7, which would neutralize this loss. But that moves it pretty close, and it's right at a price level where I sort of expect it to fail. And it might monkey around in here and kick me out and then keep going, but I want to give it some room. I've already made my science project, and there's a whole long day ahead of me. So I'm not in a hurry to try to lock in that extra little piece yet, but you might be. And depending on the time of day and whatever else is going on, that might be your plan. But you got some choices in there. And then that all kind of becomes moot, because if you didn't do it on that move, here's let's say your stop was here. If you didn't run it all the way up, now you can get to a 1 bar low or a 2 bar low, and now you've locked in. If you go to the 2 bar low, skin of the dragon, you're locking in plus 1R against the minus 0.7. So you're already in the money for 0.3 if you just go here. If you lock in 1.5, then you're at about 0.8. So by show of hands, or put a note in there, would you go with stop 1 or stop 2? Commit to it. I see a lot of ones. Either one, you're winning. By this time, if it hasn't failed, so if you were watching this from a position in a stop at 1, and you see that, and you see where the summer is becoming fall, and this has already made a high, and it couldn't make a new high, and it closed here, you could move your stop to here or just take it, which would have been better. So what I do on this one is take the I want to catch it at the edge of the dragon. So this, everything north of the dragon in this whole region, this is all excess gains. So when I have that nice win, I don't want to let it come back into the dragon. So I'm happy to take that there, and that's about almost +2, almost. It holds above the PSAR. What will we call this reentry? Yep, this is the COTA 2. It gets interesting as soon as it gets above the peak of the RL10. So there's not much tactical space in here, but we really like this because it couldn't break through the PSAR. It gives me higher lows. The RL10 has started to reverse, or started to reverse and then go higher. So that's pure COTA 2 all day. If we wait for it to break above the R10, what would we call an entry up in this region? Emerging dragon. By this time, we should be having our stop now to about here to lock in that little gain. Looking pretty good. We might also move, might move that to maybe a 2-bar low. Noticing lower highs collapsing into a doji. So I want to just say, all right, what are you going to do? And let me lock in this whole piece right there, which is a maybe 1.5. Here's one where failure to fail did not move out right away. PSAR still holding. This whole thing resolves to the upside. We get an immediate payoff so we can get our risk out right away. Orderly exit at the edge of the dragon. Didn't play the PSAR flip right away. Waited for the RLX10 and then it just kept failing. So took a flyer on that one. Not much there, which reinforces the upside. Caught a 2. Up we go. Looking for a break above the peak of the dragon or above the RL10. Target 1 and target 2. So this is all tactical space inside here. How soon can I get my risk out? Quick loss. Stop and reverse now that we're in the spring. Quick 1R in the bank, and it closes. So all things considered, a nice way to bring the week to a close with the Friday trade here in Intel. Semiconductors in the house. Quick look at the traders today before we get into the weekend reports. All right, here is all right, this is Devon Energy. This is 3 minutes. I think this is Gary. Gets paid. Second position. I think he waited too long on that one. When this doesn't immediately move, I wouldn't. I mean, it's about don't give back more than that. This was reasonable to wait for the R10 to break out of the dragon. I like that short. You waited too long on this one. This is where your short is. When that doesn't work, yep, you see it right there at the skin of the dragon. Make it a scratch. That was actually a tradable PSAR flip, and so is that one. And that's where your trade could be. Here's a couple from Eugene. Z3 pinch, breakout, measured exit, 2.5. U.S. Steel, those early movers from the gap up and go, gets paid 1.8. Um, he was, he got his one MMRB breakdown from the dragon, gets short. It's not working, so quick scratch, quick reentry, makes a fraction. You know, it makes a no lose plus dinner for two, and nets I think 0.5. But that's what was in there. There just wasn't much. Pretty nice. And here's Tesla on the 3 minutes. Z3 breakout, gets paid, doesn't lose, avoids the pinchy Z3. Here's the Z3 breakout. Tries the second one. When that doesn't work right away, he scratches that one out, makes bank on the first one. Couple quick scratches. Let's see. 0.5, fraction 0.75, scratch, and a minus 0.5. And when you add it all up, 2.25 for the day, that looks pretty good. Nice work, sir. We're looking at Nolan's work on the Kata 2. So this is for the week, 45 trades. Best trade 2.4. So we got to work on this one. Don't take losses greater than one. Just about a coin flip, 20 wins, 22 losses. I think you were rolling in, you might have rolled the loss scratches into the losses. So that's pretty close to a coin flip, and you're getting paid, you're paying off 3-2. So if we, something I want you to notice on this is that from about here on in, we're not taking, it is rare now to take a 1 hour loss, whereas over here, predominantly 1 hour losses. Good risk control, going in surges, good risk control in here. You can make a living on 0.2, and that's without it being very refined. So if we can get rid of that one and move some of these a quarter to the right, this is losing less on the losing trades, making them prove more quickly. That's 15 trades. And if on 40% of them, on 6 trades, if we could get 0.25, that would add another 1.5 and would really boost your numbers. I like the fact that we're positive expectancy out to 2, between -1 and +2, and then we had the possibility of fat right tail. So making progress. All right. Looking at some health checks here. The 150-day look back, we're closing in the upper 80% now off that 150-day low. Inside the 30-day box, we're near the top. On the 10-day box, near the top. So this is all systems go. This is starting to look like the fireworks. Is there room to break above the 150, or is this where it starts to roll? This little 1-day pullback is still in the noise channel, but we'll be monitoring it. I like having minimum risk over the weekend in that extended position. Here's what it looks like zoomed in on the last 30 days with the daily chart. Very orderly, open, ran up a little bit, held the level. It's still above the dragon, above the PSAR. So I want to, if you're still holding positions from in here, I want to make sure that we respect those gains and don't give a lot of that back, because we've seen 2 legs up. You see 1, you work for 2, and then you hope for 3. If it gets to 3, this could go to 430. So we like that. Today's, let's see, here's today's sectors. Just a quick look. The S&P actually was pretty strong for today. You had U.S. Steel, Cliff Natural Resources, and Alcoa. The metals, 2 out of the 3 metals did pretty well. There's your Intel, was better than the Qs. NVIDIA gave some back. Texas Instruments underperformed. So this was more of a sideways kind of a day. You had strength in the U.S. with the diamonds are best, and then the small caps. Treasuries underperformed the market. And then 2 speculatives, the Qs and the emerging markets, both underperformed the S&P considerably. All right, let's jump to the reports for the weekend. So we've got a new blended monthly rebalancing. This is what we're holding for February, a strong Euro component. There's Euro Asia, there's Asia less Japan, Euro Asia, and Australia. There's China, there's the Euro 350. So the globals are really doing pretty well right now. 100% exposed in ETF2, still in bullish quiet. That's good. This little 2-day sell-off was orderly, still fairly strong, and then the long-term broke above 50 to move up a level. Bullish quiet here. We're 4.6% above the 200-day moving average. The volatility risk index, still risk on. It's neutral, so it's not running amok. This is still a very healthy long side level of volatility. This is not an explosive growth. This is grinding growth. That's what we want to see. In the regression line fractal on a daily, this is the RLFF. You can see we had, after that nice run up, we've had 1, 2 legs down, bump, bump, and now we've ground back to this level here. There's your cushion. Here's the upside target. 2 of those. Still feels good. So we're liking that. The 3 bar, 3 days per bar is what I was trying to say. You've got a Kata 2 formation that has broken out above the peak of the dragon. So this is a very favorable condition. Next target here at about 430. If that breaks out, it's up into here, and then finally up around 470. So this is still very favorable. The RL9, or the RL9, the 9-day bar, this is the slow sniper. You can see that has a Kata 2 formation. It's pulling away from the 9-day PSAR, and it has cleared this hump. So the next target, 430, looking very good, starting to heal. You've already seen that one. Yep. All right, we'll shift to the blended monthly rebalancing analysis here. Your big winners gave back a little bit today, but they're still strong enough to be in the primary position for BMR. The top 5 are all globals. It's not till you get to mid caps, small caps, tech, real estate, beginning to outperform the broad market. And diamonds, which had been the strongest, taken a back seat. So this is a slow shift to the growth on or risk on in the U.S. That's a favorable sign. A bruised U.S. market beginning to recover. Seeing the same thing in the ETF 22, where we add the XL series. Materials and metals looking good. Industrials and finance are better than tech, so you like that. You like to see that. That's the real economy trying to make things and pay for it. Excuse me. And then you see the defensive plays are rotating to the bottom of the S&P. That's where you see staples, healthcare, and utilities. Those are the defensive plays. And tech is now starting to move up the stack. So that is a slow rotation into growth in the U.S. Quick look at the Dow. Hard to argue with that success. Boeing, Nike, DuPont, Cat, American Express. Not really a tech company in there except for Boeing, and that's more defense than tech. It's getting murdered. Johnson & Johnson and Amgen. I really like Intel making this nice little recovery off the bottom. That's a pretty good turnaround after having been slaughtered over the last 3 months. That's a value play on Intel for the long run. Can the U.S. afford to let Intel go underneath? No, cannot. We're going to shift to ETF2. A couple new ones that jump in. That's green and white. That's this one. Was good, now great. So that's new strength. And that's home builders in China and Hong Kong. And also this Dow Jones Internet. So that's tech starting to come back on. And we're starting to see just the first sign of some weakness in the globals here. White and green, which is this. Was great, now it's just good. So going to be careful about overcommitting to Europe. Just be mindful of that. The tradables, this is based on ATR percentage. So we've picked the top 30 ETFs by average daily dollar volume over the last 30 days, and then looked at the ATR percentage because we want things that are very liquid and very volatile, make the best traders. The ones in green are exceptionally volatile compared to this peer group. So energy, semis and biotech, discretionary, gold miners in Brazil, oil exploration. Shift to the daily report. Go right to the dashboard number 2. Still a good set of U.S. symbols in the auto framer, better than 2 to 1. Got a couple 551Ws, Visa, Caterpillar. You got some triple screens here in Boeing and Walmart. Walmart becomes interesting now. ETF 30. We got some candidates here for the auto framer. Couple triple screens in emerging markets. Gold. Got a 551W in Euro-Asia, which means they all had to give back a little bit in order to create the investable rebound. So it had coming from support, made a low. It is coming back, and if it holds, then there's a nice trade to the upside. And then if it breaks above the previous one, that's really where you want to get on board. So that's buying strength on a dip. Here's the strength. Here's the dip. That's the recovery that we frame to a retest of the 10-day high. Snipers and Godzillas. We have 3 Godzillas now in the S&P. Electronic Arts, CNC, and CVS still in the mix. CNC is a raging Godzilla. CVS has started to cool off, so maybe we shift to CNC now. As you know, I like the double greens. Among the most volatile, you see things like HBI, APD, Humana's in there, and so forth. One-day movers, we're looking for the largest scores on the Z1, which is the Z score for the one-day volatility, the size of that move. I like anything that is double green and especially was a large mover. So let's have somebody frame Apple this weekend, and I think it's Clorox CLX. Yeah. Even Google's in that condition. Amgen in that condition. Regular sniper stats for our tactical set and the Four Seasons of MACD still being dominated by summer and fall. So that's what happens when you get a strong summer move and some dip back into the fall. So that's generally speaking a healthy condition in the market. Looking at our tactical set, I like the ones that are double green. So Coinbase and Intel, Apple, short list. Also of interest is anything that's white and green. So that means you're seeing the first day of larger than normal moves. So you had sort of a normal 5-day volatility, and then today was a big day. So you like to see that, or it could have also been down, but you like the beginning of expansion, and that white and green gives you the ability to get the first day. Or you see the first day, then you can take the second day. In the multi-time frame NDX summary, some give backs here. IWM holding up pretty well. Real strength in here. Apple, U.S. Steel, American Express, J.P. Morgan. There's some finance creeping in right there. The trading value list. We're looking for large average daily range multiplied by the reliable fraud quality number. So clean energy just moved to the top of the stack, displacing Tesla, but Ethereum, oil exploration, Boeing energy, Brazil, and metals and mining on that list. Some good traders involved there. All right, that's everything we got. We'll get this published and posted. We'll get the story circle in the morning, and swing trade framing tomorrow night. Sunday in this room, I'm going to give a Q&A session for Creativity 202 and discuss in general how that course works. And we're looking to start the new cohort, I think around February 15th. VTI extended the registration date. I want to give folks that sign up late or later a chance to get on board. So we'll do some Q&As between now and then. The regular cohort that's meeting, I see you there, Dan. We're going to continue to meet for work in progress as we briefed Sunday mornings and Monday evenings as usual. And then the new guys will join officially by February 15th. Okay. All right, that's everything we got. We'll get this published and processed and published. And I can smell that pizza. Take good care. See you tomorrow.